analyzing the oil market, what is priced in the information in the oil market as far as the Russia-Ukraine crisis is concerned. The purpose of this podcast is to give people a sense of what it feels like to run a hedge fund. And I think one of the important things that we do here at Orange Capital Partners, like every other hedge fund, is to read what's priced in the market and to analyze also what the information content is. So for example, in this particular case, we're looking at the oil futures market, and the oil futures market is downward sloping from $110 a barrel down to about $85 a barrel 2 years out. What this means for us is certain information. I want to discuss this. I also want to discuss our conclusion as the way we see the world evolving going forward. This is a Not Even Wrong podcast. It's March 3rd, 2022. This is Krim Delko. Since the last update, the fund is up about 8%. The market is up about 2%. For the year, we are down 20.5%. The market is down 8.2%. We're underperforming by 12.3%. So let's start with the futures market. The oil futures is downward sloping. The curve starts at about $110 a barrel in the near month and then goes all the way down to like $85 in the outer years. What this tells us is that, of course, the market is expecting a stabilization. That's very typical for times when short-term oil is for some reason scarce. So we have a short-term situation where demand is very high, supply is not enough, but then we expect the supply to stabilize. In our opinion, this has two interpretations. One is that we have a non-zero probability of a normalization in Russia. And I think information in general is always in the eye of the beholder. That means that we have to also have a certain assumption. What do we mean by normalization in Russia? Normalization in Russia for us means a removal of Vladimir Putin as a powerful person in Russia. And if that happens, we could have a normalization of the oil market where oil comes back to the market out of Russia. Of course, you could also have the other scenario, which is that we have a higher supply. We do believe, though, for that, we need higher prices to sustain longer. For example, the CEO of Pioneer Resources, Sheffield, just said today in an interview that he is very reluctant to increase production. He's the largest shale producer in the Permian in Texas. Because again, these people have been there many times before where short-term prices are high and then the prices collapse and then things are bad and so on and so forth. So the oil market is not expecting a long-term exclusion of Russia from the oil market. Now the other interpretation also, this is the convolution factor here, is that we could have a recession. I think with high oil prices, recessions are more likely. And on top of that, we have the post-COVID effect that we talked about several times in this podcast, where we have all the sort of COVID privileges being taken away. People have to go back to work, they have to pay their rent, and all these things. And at the same time, demand is slowing down because there's no checks coming anymore from the government. The Fed is tightening. All these things are happening at the same time. And now we have a higher oil price, so we have a very high likelihood of a recession. We have spoken about this before. We do expect a two-quarter recession in the U.S., a relatively mild recession, because we believe that this is actually a good thing, particularly for innovation assets such as Tesla. All the things that we think are good in this economy will strengthen because they have now better access to supply, less competition for talent, all that stuff. So having said that, let's analyze the situation now. So let's say, take Pioneer Resources. Should we buy the stock or not? And I think buying any kind of oil stock always starts with the oil price. You have to have a view on the oil price. You can't buy any kind of commodity asset without having a view on the commodity. And this applies to everything else, nickel, iron ore, whatever you're thinking of. Now, commodities are interesting assets. And the one thing that commodity markets are driven by is actually Russia. Russia is a big player in the commodity markets, always has been, and this is the main contribution of Russia to the global economy. And the one thing that Russia always does is either withdraws supply or it adds a lot of supply. After the Soviet Union collapsed, commodity markets became very, very cheap for a long time because the global markets were flooded with commodities coming out of Russia. Now we are the exact inverse of this situation because Russia is being isolated again, actually even more than during the Soviet Union. There is a lack of supply from Russia. Oil is just the tip of the iceberg. There's all the other commodities that Russia is delivering that are also being cut off from the global supply. Therefore, prices are going up. And like I said in the prelude, we can read from the futures markets, particularly in oil, which is the most liquid futures market. We can get a sense for, okay, where is the market seeing the next 2-3 years? And I think the market is seeing that we will have a normalization either by replacing blood inputting and bringing supply back to the market, or we have a normalization by reducing demand through recession. Before I go further in the analysis, I also want to make a bit of a comment in terms of our expectations for the macro environment in general. We've said several times in this podcast that our expectation is that we will have a relative normalcy in the macro environment, in the sense we won't have catastrophic events. So we don't analyze situations like nuclear war, meteorite impact on Earth, or anything like that. Of course, we're not saying that one shouldn't think about this, particularly now. What we're saying is that we don't work under this premise, because the way we invest, our investments are in fundamentally new concepts and engineering practices with large impact. This is where we live at Orange Capital Partners. We can't focus on, okay, how will innovation stocks do within the context of nuclear war. It's just, it's not a skill we have, it's not a technology we have evolved to be good at. We believe it's not very productive to think like that. If you really think that there will be a nuclear war, I think you have to do different things. You shouldn't be thinking of, let's say, is Tesla going to deliver the next 4680 batteries on time? You should be thinking more in terms of, let's say, how can you grow food and survive, things like that. So let's get back. So our premise is a relative normalcy. That means that we think the world is going to stay roughly the way it is now. Of course, changes happen all the time, but we will have sort of the geographies, the nations, the constitutions, the war, even the wars and the potential wars, all of those things, you know, Middle East conflict, Israel and all that, these things don't change. They will change slightly, but we don't think that there will be a big paradigm change, a French Revolution, a Russian Revolution, or a nuclear war, or anything like that. Having said that, we do think now, actually mentioning Russian Revolution, that there is a non-zero probability for a change in Russia. And now this is, let's say, the Goldilocks scenario. We have two scenarios, a bad and a good. Let's start with the good one. The good scenario is that we have a change in Russia. Vladimir Putin gets removed, hopefully with the least violence possible. And then we have a chance for Russia to be rebuilt out of its own efforts into a real Western democracy with the same type of energy that we have in other Eastern European countries, such as, for example, Poland. This is one very good Goldilocks scenario. I think what's also very good about the scenario, and this is almost factual now, that we have a much more purposeful Western democracy environment, particularly the United States. The United States has been a country for years now, for probably 2 to 3 decades, with hope and not a lack of purpose. We were lacking purpose. The purpose of our country as a country has been to, in the past, to proliferate freedom. And I think that has been lost on us. And I think now, with this conflict in Ukraine, this is coming back, and this is also incredibly good news. I think it will propel the culture of building things that Mark Andreessen has been speaking about, things that Elon Musk talks about all the time. We have to get back to building things, making things happen, a little bit along the lines of the 50s and 60s. And all of these things are incredibly good frameworks for our innovation stocks that we invest in Orange Capital Partners. I think the bad scenario is that we have a prolonged inflationary period in the world with a prolonged war in the Ukraine and around Russia, and a lack of action and a lack of decisiveness and a lack of purpose in the Western world. If that happens, we're looking at a bad situation. Again, we're not thinking of a catastrophic event such as something like a nuclear war. What we're thinking is more along the lines of a maybe World War I type situation, where it just goes on for years and it doesn't really add anything, and it also doesn't give us the purpose. We don't think that this is the case because we're already seeing the galvanization of people, particularly in the Western world, even in this, particularly in this country, in the US, around protecting freedom, around protecting human rights and all these things, and also protecting the sovereignty of nations. These are all important factors because, like I said in one of my previous episodes, you know, all the other things that we think about, social justice, religion, abortion discussion, all these things that we have in this country, which are important discussion points, they're all fruitless if we don't have freedom. We need to protect our freedom. This is very important. I think we are galvanizing around this. Our political elites are galvanizing around this. And I think as a consequence, as a second, third derivative out of this, we will have stronger institutions and that is incredibly good news. So to summarize, we started with the oil market. The oil market is pricing a non-zero probability that we have a change in Russia, removing Vladimir Putin, which would be a very good thing. It's a non-zero probability. That means it doesn't mean it's a high probability. We are at Orange Capital Partners very positive about the long-term aspects of this situation. We believe that Vladimir Putin can be removed, and that the purpose and the newly gained purpose that we have, particularly in this country, will be incredibly good for productivity and future innovation in this in our environment here in the US and also in Western democracies such as Germany. On the flip side, we could have a prolonged sort of trench war or something, modern version of that. Of course, that would be bad. We don't think that that's the case. We see the galvanization of people around purpose, around going after thugs like Vladimir Putin, and that's a good thing. Of course, we don't know how the day-to-day situation will evolve, and there's always a risk of very bad things happening. But nevertheless, we believe that with the Ukraine situation is, in a sense, a very positive development, because we are seeing a country like the Ukraine being supported by the whole world, ex-China, getting moral support and also financial support and resources to fight for freedom. And this in itself is already, in my opinion, a huge deal and a very, very positive development. So from a funds perspective, now what we need to do is get through the next 2 quarters of, we believe that there will be a recession driven by the post-COVID environment and also now by the higher oil price. But coming out of that, we believe we will get much, much stronger, and particularly companies like Tesla will be even stronger and grow faster and deliver the value that they promise to their customers and to the world even faster and more effectively. Thank you.